because
Mhm.
Thursday was a really interesting day for global markets. It was a volatile one, as new coronavirus fears surrounding the Delta and Lambda strains caused a pretty significant market sell-off. I'm not sure what the exact catalyst was. It could have been the news about Japan banning fans from attending the events at the Olympics this summer, but Asia led the declines on Wednesday evening. And in response, the next day, Wall Street gapped down hard at the open. At the one point, the Dow was down about 600 points.
Mhm.
The
Is
markets
there
did recover, but I think we need to understand really what led us lower. And I think it was stocks like the airlines, the cyclicals, and the epicenter stocks. I really hope that none of our viewers are surprised by that, because ever since coming on this show, I've reiterated my bear stance on the cyclicals countless times and the reopening stocks. And we've all made the case for investing in high quality, non cyclical and growth companies like Amazon, which is actually interesting that despite the broad market weakness, reached all time price highs, $3,700 a share. I remain bullish on that. Um, but I think we just need to recognize something's happening with the markets right now, something deeper. There really is a rotation from value to growth right now. And, although the markets did recover, Friday was a great day today. The Dow was up 400 points. The NASDAQ was up like 140 points. I think now is not the time to be throwing caution to the wind.
Mhm.
Um, we talked about market breadth a few months ago, and I was super happy about that. We were seeing everything participating, and that's just not the case right now. Energy, financials, industrials, materials. Um, Definitely later on want to hear your take on the small cap and how they've been responding, but generally, I don't think that's been very good. Um, and despite markets hitting all-time highs almost daily, no one, not everybody's participating. Um, do you guys have any thoughts on that, on just market breadth and how it's really just been the big cap tech stocks leading the way?
Kinley, you have any thoughts on? Because I have some thoughts on the psychology behind it, so I don't know if you're seeing it in the charts, but like the way I'm looking at it is because the markets are near all-time highs, it's almost I think there's a group of investors out there kind of looking for a reason to sell off. And so
Mm.
they're taking any catalyst that they can, right? And we even forgot to mention this week we had the China thing. They clamped down hard on Didi, and so a lot of the China stocks, they got sold down too. So it's like there's a couple of things that happened, but no, I don't think we could point at any one incident, but like there's a couple of things that happened within a short time span. And I honestly think the market just reacted because it was like it is at all time high number, so everyone's kind of looking for a reason to size out a little bit, you know?
Mhm. Yeah, I think that definitely has something to do with it because you got to look way back too for the long term investment. Like guys that were buying kind of near the bottom of 2020, right? Like you're talking like massive percentage gains pretty much across the board, right? So we had that big run up in 2020. We consolidated for a while. Now we've had this next leg up. So at some point there is going to be certain people taking profits, and that's just healthy. I mean, there's going to be a lot more people on the flip side of that who are watching it go up, just begging and waiting for a pullback so they can buy into it, right? So it's the same old thing that the market always does, right? People take profits, and then everybody who missed the big move, they're just eagerly waiting to buy that pullback. So I think, in my opinion, if as long as you're in the right stocks and you're on the right side of the market, then you just hang on and ride those dips out, and you'll be okay. Like anything that has to do with reopening or like airlines, like I've said that I was saying that months ago. Still, like all that stuff, the cruise lines, like, oh, you think they're going to go through the roof when everything reopens. And like, to me, it's just like, that's kind of like a hold and hope scenario. Like you're betting on this virus, you're betting on the world that, you don't really know what's going to happen. You don't know if people are going to get sicker. You don't know if it's going to shut down again. Like there's way too many just gambles and what ifs for me personally to be comfortable putting my money in something like that. And I just don't think that's a safe bet. I mean, it might pay off huge, but it could also fire big, and I don't like that kind of stock personally.
So I agree with both of your sentiments there. Um, but when we're talking about taking profits because the market's, been running for so long, I see that with the cyclical stocks, because the cyclical stocks, they were on a tear. January, February, March, they led the way. And these stocks are way stretched above their, 50 or their 200-day moving averages, and they need some time to sort of catch up and consolidate. I think it's more of a reversion to the mean towards the downside. But then you have stocks like, for example, Amazon, which was consolidating for a year, and it's literally the best company in the world. And you literally had a year. It was a buy on a silver platter. You were able to buy it from like 2,800 to like 3,500 for a year, and now it's just starting to break out. So I think we're just going to see flows towards that. And I think a lot of the fast money is going to say, hey, what I'm in right now is not working. Why don't I bail and go on something that's actually working? Amazon, like 37, 3,800, 4,000. That seems like a great buy. So I think like with Amazon, it's just the beginning. We're in literally the first inning of this advancing phase of the NASDAQ. As you guys know, like it was June 22nd, I believe, that we broke out of a 6-month consolidation in the NASDAQ, which is really long for an index that has led the way for the last, I want to say, 11 years. And we started this new advancing phase.